Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into uranium stocks to watch amid US President Trump's plan to boost America's nuclear capacity. Uranium stocks have surged since US President Trump signed an executive order to expedite and promote the production and operation of nuclear energy. On May 23rd, President Trump signed 4 executive orders which aim to encourage the development of a domestic uranium supply chain to reduce America's reliance on foreign imports, particularly from Russia and China. The industry is also poised to benefit from Trump's broad tax and spending bill, which eliminated many green energy subsidies but retained tax credits for nuclear power. Jefferies analysts saying the signings mark the most aggressive US intervention in the industry in decades. Citi analysts have noted that new orders may nearly double US-driven global uranium demand.
Obviously, it's going to take some time for that demand to be built out for uranium. And Australia is obviously, close to 10% of world's supply uranium, and even a much bigger share of resources there. So that is providing some comfort.
Expectations the US could shift its reliance away from the big producers such as Russia and China has lit a fire under Australian-listed uranium players. Australia has the world's largest uranium miners outside of those two countries. Now, short sellers have also been scrambling to cover their positions after targeting the sector amid a downturn in spot uranium prices caused by the world's largest uranium producer, Kazatomprom, downgrading its 2025 production guidance by around 17%.
Details look really bullish here. Hopefully, it puts a floor under the spot price, which sort of drives sentiment in the sector. Which it probably shouldn't, but it does. But overall, the fundamentals over the last 18 months has continued just to get more bullish and more positive for uranium in terms of where the supply side's at.
Well, Boss Energy shares have spiked more than 20% in the past few sessions after declining by almost the same amount over the past 12 months. Boss is one of the most heavily shorted stocks on the ASX 200. According to Ord Minnett, which has a buy recommendation and a $6 price target, more than half of the short positions in Boss Energy may already be out of the money, with the broker estimating it would take over 14 days of average trading volumes to unwind them.
Medium and longer term, we actually like the sector and think that there is further to run. We like Boss Energy. We've got a buy on it. We like Paladin Energy. We've got a buy on it. And also Lotus Resources, which is a speculative buy.
Well, when it comes to Paladin, technical analysis signals the stock is likely to remain in a mid-term bearish pattern, but analysts are bullish on its outlook. Shaw & Partners has a buy on Paladin with a $10.10 price target, suggesting a further 60% upside from current levels. NextGen CDIs are also listed on the ASX. The Canadian company is focused on developing the Rook I project in the northwest of the country into a low-cost producing global uranium mine.
Our view is NextGen is really the standout in the sector, and it comes down to 2 factors. One is scale and the other is cost. NextGen at full production, and this will take 4 to 5 years to move to production from where we are today. But it's likely to be producing somewhere around 25 million pounds per annum, which puts it as one of the 3 major global leaders with Cameco and Kazatomprom, and at a very low cost. So we think it's the best quality asset in the sector.
Well, US power consumption is projected to hit record levels this year and next, driven largely by energy-intensive data centers supporting AI and cryptocurrency mining. Analysts say this alone means uranium demand will remain strong, with America's readoption of nuclear energy a major boost for global demand, which has languished since the 2011 Fukushima disaster.
It was back.
Yeah.
There was a brief period of time when the really hot money came out, when it went from 100 a pound down to just under 70 a pound. It's stabilising at that point. The nuclear energy is not going away anytime soon.
And that is your IG Macro Intelligence for this week. We'll see you next week.